Here for another live stream with Traders Profit Club. So I've been getting a lot of questions on a couple of essential trades that we're looking to go into in the near future. So I have a huge trade that we're looking to go short on, which is the US dollar Japanese yen, which I put into the Discord for you guys to be able to check that out. I actually did a that we're looking to look oops, let me just turn this. So I already put in the Discord what my analysis was. I'm actually going to redefine that throughout the week just until we see the liquidity trap. So as we can see right now, price, I'm going to go to the 15-minute chart to show you guys exactly where I believe price is going. So as we can see, we can go through this and we can see that the trauma phase is being accumulated. We can see that this is the honeymoon phase right here up to the spike to the 11,500, which is a psychological number, which we know that price likes to hit these psychological numbers to determine where the trend's going to be. So as you can see, this is definitely a touch to that level, and then it did not break because there is an ADR, and market makers have a weekly and monthly range that they can only be able to test but not break. So as you can see that there's a lot of pending orders in this area where they then ascended to that area to be able to stop these traders out before working back down to the downside. So if we're looking at it from a long-term perspective, or if we're looking at it from a bigger chart, we can see that on the hourly, we can see this consolidation was between we can see right here it was 1100, 11.1, and we can see definitely that market price was definitely in this area, but it did not break until we had this Thursday level, which then it broke out of this area to retest a higher level. But that is nothing to be feared of, especially if you guys got stopped out of this trade. I had a trade as well that I got stopped out of on the USD JPY, which is okay as long as you guys have defined risk management and you guys are not using over leveraging your capital. Then you should be just fine getting back into the market to be able to make that profit back throughout the next couple of weeks. So moving straight into it, I'm going to actually show you guys exactly what I mean. I actually made as you guys know that I do have for most of my clients, I have a trading strategy guide that I'm actually going to give to you guys and show you guys how exactly this works. And then from there, we're going to go into the ADR, the average daily range, which essentially is a huge market structure or market strategy that I take into play whenever I'm getting into position. So if you guys have seen throughout this month, we've accumulated a lot of pips. I've been doing some really good entries for the dollar. We had all of our trades of this week have closed out in profit besides that last USD trade that actually I didn't even put in the Discord. So as of right now, we have most of our trades that I had in the Discord for you guys to follow went into profit. We had that gold US dollar trade, which went into profit. We also had that USD Japanese yen that was over 148 pips, which with the Great Britain pound US dollar trade, which we did take profit. So if you guys are following these signals, I'm giving you guys some gems on to be able to increase capital. The reason why I didn't get into the Euro USD trade was specifically on two reasons. One of the reasons was I didn't like the liquidity trap on the downside of the market. The Euro USD was definitely still having a spontaneous factor with fluctuations onto the downside. So market price is definitely showing me this integration where I was trying to hold. That's why Great Britain pound is a little more stable than it is with the euro dollar due to the transactions pace 38.2% to 16.8% of the Great Britain pound. I knew that the volatile spikes with the Brexit coming out, I knew that market price is going to shoot up higher. That's why I got into the Great Britain pound trade, but not get into the euro trade. But now looking into March, obviously next we're going to be done with this month's trading session. So we're going to go into March, which then opens up a new monthly range that the market makers like to go into. So for you guys that are new to my channel, my name is Brenton Walker. I'm a Forex trader here at Traders Profit Club. I've been trading for about 4.5 years and have been trading full time for the last 2. What I like to do, you guys, is teach people basically the psychological methods and basically teaching how the market works through an algorithm, basically market structure and market behavior, which defines through market psychology and human psychology, which is integrated both into each other. So integrated together, excuse me. So what I like to do is factor both of these elements in so we can be able to distribute both of them and make obviously a profitable trades through long-term and short-term investing, right? Speculation investing. So what I want to map out for you guys is that for you guys that are new, I have an ADR, which ADR is basically average daily range, which is specifically used for intraday scalping, could be intraday trading, whatever exactly you guys like or whatever floats your boat. We can be able to manage through these different structures, right? So what I made is something called the Market Maker's Handbook. It's basically a structure that was passed down to me, and through a lot of research, I've been able to understand how the market is played through banks and institutions and how they play the market, because as an earlier trader, when I blew, couple counts, I started to realize that there's something that's bigger than what I believe that's real than just plain technical analysis, head and shoulders, cup and handle, Fibonacci retracements, harmonics, all that's great and all. But if you're able to master market structure and market analogies, then you're able to define how the market's going to be working, right? And that's through daily highs, daily lows, weekly high, weekly lows, monthly ranges, and specific methods this market likes to play with. That gives you a foundation, a blueprint for you to organize your trading strategy and integrate into this process, so then you're able to make more profit instead of being, guessing and then gambling because you're not understanding the methods. So what I made is basically a book that teaches you guys how to be able to define this to make more profit, right? So as you guys can see that in the Discord, I mean, all the signals that I've given you guys have been profitable, and not just that, but for Eurodollar, for Great Britain pound, even for crypto, it works in crypto. We took profit on the ETH US dollar trade. We took profit on the BTC trade. So as you guys can see that these are the same formalities that I'm using when I'm trading in the longer term markets as well as the short term markets as well. So I'm going to go into it, you guys, and show you guys some of the stuff that I've been researching, and I put it into a PDF or a little program for you guys so you guys can be able to check it out. So how to make big cash in the Forex market. These are essentially the things that I look for when we're trading in the markets, right? So we want to find the most lucrative markets on the Forex, right? So the EBS, which is an electronic broking system, right, which where all of the interbank traders, right, 92% of the volume in the Forex market is traded through big institutional banks, UBS, JP Morgan, you name it, HSBC, and so forth, right? So most of these guys are doing transactional basis costs, right? Transactions that are making call the interbank market, which then overall makes the currency exchange rates for all across the world. So find the most volatile time zones, right, in the market. So so when we're trading, right, just like anything else, we're trying to find the best time or the best zones or the best whatever formalities that are going to be able to define us to make the best transactions or the best trades. So for that, we're looking to London and New York session. Now, London and New York session are actually the highest volatile sessions in the Forex market, right? Because we have the biggest foreign exchange broker in London, and also we have the biggest stock trading brokers in New York, right? So those two time frames, right, are the biggest time frames to trade in the market. Another thing is find repetitive patterns that follow the bank's movements, right? We look at M and W formations at weekly low, weekly highs. We have Fibonacci retracements. We have harmonics and so forth, which is also in this program. So what else we like to look for is follow investment bank news, right? So this is something that I like to integrate as well. Fundamental data. Sometimes when I'm a little skeptical, especially when it comes to non-farm payroll or GDP or CPI numbers that come out on the monthly or on the quarterly basis, I like to define those methods as well into strategy. So you can use investing.com, Forex Factory, and so forth to be able to integrate these systems to be able to give you guys a better trading market system. So good to see you guys. Really happy. Yeah, of course, no problem, Ryan. I'm glad to see you guys on here. I know I'm a little late today. Usually I'm live around 11 o'clock, but I'm really busy as of right now, just doing a lot of stuff at once. But I'm really excited to be here, you guys, and teach you guys some of the stuff that I've been learning. So following the investment bank. So follow market major supports and resistance levels as well. You want to look for market major support and resistance levels, which we want to look into as well. And look for psychological numbers, which I'm going to show you guys how this works as well. So this is basically the blueprint that's been able to make me, a lot of money, and a lot of my clients money, and so forth, while I've been doing this as a fund manager and also as a day trader myself. So look for test and monthly, weekly, daily highs and lows. Below will show you how basically these key concepts and diaphragms are going to work. Okay. So this is daily pip range, you guys, and you guys can find this on, investment.com. All you got to type in is ADR, which is the average daily range, and you go into Forex, and it'll teach you all this stuff. So I'm not going to really go into that right now at this time, because you guys can go to my last videos. I have like a lot of videos that have already gone over that. So that's something that I'll tell you guys later. I want to show you guys exactly find the most volatile zones. We talked about that, New York and London session. And these guys are basically the pair Tokyo session. These are the different percentages that the market plays on during these time zones, right? So if you're an intraday trader, if you're a scalper that uses and integrates ADR, these are some of the formulations you need to have, especially because when you're trading in the market, you have to know how much the market's going to move in that time frame, because you don't want to put a huge marginal trade on there and you don't even know how much the trend of that time frame is going to use, right? You're gambling at that time. What speculation investing is you speculate, meaning you're managing capital, which is essentially going to make you over time money, right? But the speculation part of it is determining a strategy, an edge, which formulates into a precise factor then you're able to use over and over again to be able to make money, right? So that's how the speculation investing works. It's not really per se something that we use. I know a lot of people use strategies and indicators to be able to make their formulations, but at the end of the day, you want to have your own specific strategy that you have compounded to be able to be confident in to trade over time, and that's when you're able to maximize as much profit as possible, instead of having you living in this indecisive, skeptical type of trading, which a lot of traders definitely did. I did in my early days of trading as well. So going into it, I want to show you guys the repetitive patterns. I think that's the mostly important thing that I want to talk about in today's live stream, is going over the repetitive patterns and exactly what is going into the market. So find the repetitive patterns in the market institutions. So we're going to actually go over that right now, and it's about 11 different patterns that I like to go over, and this is just a blueprint, a methodology that I've been able to follow and has been able to make a lot of profit for, like I said before. So midweek reversals essentially is when price is moving most of the direction in 1 week. So I'm going to show you guys on live chart right now, and then from there I'm going to come back and forth so you guys are understanding exactly what I'm saying. So that being said, so as you can see that we have obviously daily charts. The Forex market is 4 days a week, 24/7. The fifth day closes 2 p.m. Pacific Standard Time, and so forth. So if you guys wanted to know how this midweek reversal works, is basically saying that the market likes to trend in an area for Monday, Tuesday, Wednesday, and then Thursday it reverses into the other side. So as we can see, price reversed here from this low to this high between here and here, right? Wednesday and Thursday. But in the beginning of this month, right, we're going from, excuse me, we're on the FDR, we're going short, right? So we're going short for the beginning of the month, and then once we had that Wednesday hit, we had that reversal to the upside, right? So if we're going to look at the diagram that I've already shown you guys, I can show you guys right here that Monday, right, has shown me that, okay, Monday here, it was Tuesday, Wednesday, and then Thursday, that reversal to the upside, right? This isn't obviously a crazy amount of pips. You guys were looking for like maybe 80 to 90 pips on this reversal transaction, and it's not always this, it's not every single week. Sometimes it just goes straight up or straight down, but around 60% of the time the market does reverse on these Wednesdays and Thursdays. You guys can back test this for yourself, and I'll show you guys that it really does work, right? So what I like to do to define the markets is have these midweek reversals based on pushing liquidity towards one area of the market to test prior areas, right? So the market likes to work on daily highs, daily lows, weekly highs, and weekly lows specifically. So such as, and then we use psychological numbers. So as you guys can see on the left-hand side where you have the marginal points, anything that ends at a 000, 250, 500, or 750, which we can see over here in these levels here, is considered a psychological number where a lot of the market likes to move around these areas, right? Which I'll show you guys, and you guys can go into my past videos, and it talks a lot about that, right? So these are specific ways I'm able to counter trend or scalp or get in my positions at the highest high or the lowest low with zero drawdown, knowing that these specific faculties are in the market because these faculties are used as fractal formations to be able to determine where market price is going to go. So where these market price generally happens is usually on this Wednesday, Thursday reversal. The spikes to the high, trapping liquidity before it moves to the downside. So for instance, well, if you look here, we can see that market price was shooting to the downside. We saw this moving formation here, and then once I saw this moving formation here, I saw that market price was shooting to the downside, and then once I saw this downside reversal, I saw price was on a Thursday, or Wednesday, Thursday, so I knew price was going to reverse. So we took a short buy position. And I'm sorry I didn't have this in the Discord with you guys. I did just take this trade earlier today, so I wasn't actually looking, or I didn't put this one in the Discord. So that's my apologies. So what I wanted to show you guys is exactly how these formulations work. and what we're looking to go towards in the near future with the US dollar. So specifically right now, that's the US dollar is having some fluctuations. We've been on a $1 trillion deficit, which obviously you guys know a deficit is a decreased valuation in an economy, right? So this economy devaluation only happens when we have to have a stimulation, especially after the subprime loan crash in 2008. We had 2012 when we had that stimulation, but then after a while, the economy should be able to run on its own, which is not able to. We're still having an overdriven economy with too much inflation, the factors in, and that's what causes basically a recession, right? It's a cycle. So this cycle is a determining element to be able to know where the US dollar, because the US dollar, right, is 60% of all central reserves and 82.6% of all transactions worldwide. So we already know that the dollar is a cash cow. So wherever the dollar is going, we know where oil is going. We know where oil is going, then we know where most corporations and most basically investment companies are looking to drive price. So if we're able to determine these factors, then we're able to know where price is going to be driven. So the thing I use is a 10-year treasury bond to be able to stimulate where price is going to go, because the 10-year treasury bond or treasury yields in general are a good strategy to use to be able to find where the dollar strength is at, right? Because the treasury bonds is basically one of the biggest investment wheels that the government uses to be able to for heavy hitters like corporations, hedge funds, big wealthy individuals and so forth, right? Like for instance, Warren Buffett's allocation is 90% S&P 500 index, 10% treasury bonds, essentially. Okay, so like we use these treasury bonds as a factor to know where the US dollar is going. We had a fixed rate at 3.2, but then we were supposed to be in a surplus economy, but then yet we had a crash, or not a crash, but a down. A short in the dollar index, right? Or the treasury yield. You can do 10-year, 30-year, doesn't really matter. What we want to look for now is that if that is into consideration, we can look now to see that the dollar can be propped up a market price, but then that's just a trap, which I want to talk to you guys more so about that now, right? So liquidity is basically, this is what we're working against, right? We're working against market makers. Market makers are essentially the people that are giving you the liquidity in your broker, right? If you have Forex.com, Hugo Way, it doesn't really matter. These things are essentially brokers that are giving you marginal capital to be able to define and make more money, right? But the thing is that the market makers are traded, you're trading in an emulated market. You're part of the interbank market. That's why you're able to get in transactions. But at the end of the day, you're still in an emulated market that's defined by that broker's platform. So what they do is that they'll have liquidity traps. They'll have areas where they'll trap liquidity before they run price the opposite way. That's where a lot of traders get caught into this trance of, right, losing profit really easily because they're not understanding the methodology that the market makers play on, right? So this is where we like to be able to define where market makers are. So how it works. So essentially, we don't need to have that much money, right, to start in the Forex account, right? You can have 500 to 1, you can have 200 to 1, but the thing you have to know if you want to be able to drive with that capital and increase it, seeing people that turn $5,000 into 80,000 or 80 or 5 to like 120, they know how the methodology and the methods work. They're not just gambling, right? That's what is the difference between a trader and someone who thinks he knows who he's trading. You got to understand that and educate yourself on these faculties before you can call yourself a trader, because it's more important is the journey than it is actually taking home money or whatever. Because at the end of the day, as long as you have a formulation and a strategy that works for you, you can be able to take money out of the market anytime, right? So what we want to look for when we talk about the market makers and liquidity providers is essentially these positions that we want to look for are trading methods, right? And the market makers, if you guys go into your broker, you can look at your broker. You either have an ECN, which is an electronic connecting network, or you have a market maker, right? Market makers and ECNs are essentially brokers that have in-house money that provide you with the extra marginal liquidity so you can be able to lose your account really quickly, right? Because 90% of traders lose their account in 90 days, factually, on a statistical basis. So what we like to see is that when the market is moving in a certain way, we can use these formulations to be able to factor in price, and that's how we're able to go. So I'm going to go straight into it and show you guys more so of what I like to show for the strategy. Okay, so we have M&W formations, which we first want to talk about midweek reversals. So midweek reversals we talked about here, where price definitely on Wednesdays and Thursdays likes to reverse the opposite way. It's been going a certain way for the middle of the week, and then at the end of that week, it likes to reverse. Secondly is something called zone hopping. So zone hopping is basically what the Great Britain pound is doing as of right now. So I'm going to go into the Great Britain pound. I'm going to show you guys exactly what is zone hopping is. So zone hopping is basically when price has been moving into one direction for a long period of time, and essentially there's a lot of liquidity from one direction still trapped and moving to another direction. So we can see that there's a huge stop hunt to the downside here. Market price was showing some spikes before. One second, you guys. All right, my apologies, guys. Sorry about that. I just had to take that for a second. But to go back into it, so we saw a liquidity trap, right? So the reason why these spikes happen, you guys, is that proprietary investors, basically from Citibank, JP Morgan, we talked about earlier, they can see open-end price trading, right? They can see your pending orders, your stop loss, your trailing stops. We essentially can't see it because we're not a proprietary investment firm, but I followed a proprietary investment company in Citibank, and I actually was working with one of their best proprietary traders, and he taught me all these different methods to understand how price moves, right? He's basically a mentor. I really recommend everybody having a mentor if you're looking to get into trading full time. So what he taught me is that the reason why they do these stop hunts is because they have a bunch of pending orders here, knowing that if the market hits this area, there's a bunch of short positions, right? So what they do is that they open these positions, right? They open these positions here. After they open these positions, they then move price the opposite direction to stop them out, right? This is called a stop hunt. So a stop hunt is a part of the method of the trading strategy I have, and I will be able, if anybody wants this trading strategy, I will give this for free to anybody who's wanting to learn more so of this. So just go in the Discord and message me personally, and I'll give you a link to this, and I'll email it to you, so you can be able to have all this information for free. I just want to give it to you guys because I just love people obviously getting the education they need to be profitable. So I'm going to go over stop hunt in a little bit, but it's a part of this trading program that obviously I'm going to give to you guys for no problem, for no fee. So we're going to go back into it. So trading stop losses are essentially, the stop hunts is where a lot of traders get out of the market, especially when a lot of traders quit, right? They quit this market because they think it's really hard and it's impossible to make money, right? But the thing is that they just don't know the structure. They don't know the methodology that the market has profoundly been based off, because once you know there, then you already have a defining nature of where price is going to go, right? It's just basically, you're not waiting for the first raindrop to hit. You're kind of already have evolved into understanding that the structures of how it's come to play. So for instance, the stop hunt as the liquidity trap is basically trapping market price into this one area before it spikes high to move off all the traders that are shorting this position, right? Because as we know that there's trailing stop losses at this area because people are definitely shorting here, right? So for them to, the market makers, they expose their capital, right? But that's the thing about exposure. Exposure is not just when you're down, when you have a drawdown on your percentage. It's also what the banks and institutions allow on their books to be able to use it as bait before they reel it in and to make profit later on, right? It's just kind of like the bait and fish, terminology, right? So what happens is that they'll use these trailing stop losses and they'll give you time to make profit, but then in a short amount of time, they'll move the market back into that area to hit all these previous trailing stops out, so they're not losing a lot of money, right? And these stop hunts are played into trading orders that have a lot of pending orders in one cluster of the market, and what they do is that they spike price into that area, trapping those pending orders and then shooting them up and hitting their stop losses as well. This is how they make most of their money. So then there's formulations in price that you're able to determine how this is going to work, right? So for instance, we had a trade earlier on the Discord that I put in there with the market stop hunt, right? So a market stop hunt was I put it actually here. I did a perfect trade on there, which actually made a lot of people some profit. So okay, so it's right here. So I put USD Japanese short position market stop hunt 11210. Okay, so this was last Monday. So if we go back to last Monday on the USD JPY trade, I'll show you guys exactly where this was and how I was able to understand where price is going to be. So this is, I'm going to go back to the 30-minute chart and I'm going to show you guys exactly what happened. So I saw this liquidity trap in this area, right? Once I saw this liquidity trap, I took a short position at this high, right? So this is exactly what, 11,200. So if we go back to the Discord, this was at 11,210 was my entry, and my take profit was at 10,750. Okay, so if we go back into the area, it did exactly as predicted. How did I know that? Is because I use this formulation on strategy that I've been able to backtest over time, and I'm telling you guys that it works not every time, but it works a high percentage of time, because once you understand these different methods on structure, on price, and knowing where the market price usually is going to go based off knowing where liquidity providers and institutions were driving the market, you'll be able to be like the sharks, but not be a shark, but be like them, to know where the market's going to move, right? So with the integration of these two elements, oh, thanks, I really appreciate it, Michael. I love having you guys on these live streams. I appreciate you guys just listening and soaking in some of this knowledge that was passed on to me as well. So what the things happen is that you see this market has pushed to the downside, which the liquidity and positions are pushed to the downside, and this is exactly what we're talking about, where we have a stop hunt to the high, right, trapping buyers, right? All these buying pending orders were in this area, and then it shoots them, hits their stop losses, and then right when people are going to short the market, they know people are shorting the market because there's a bunch of orders being filled here. You guys know that little tick thing on the side of your columns if you have that open? All those things are transactions being made by intraday investment banks and so forth. So they can see all these orders. Once they see a cluster of orders being filled, then they'll hit all the stop losses once again to move the market to an opposite way, right? But I know for a fact that the ADR is not going to move past 11,500. This is going to be the support area. So I know that it's going to hit this area, it's going to move back down and follow back to the downside of trend. So this is a perfect shorting opportunity. The dollar is going to keep the continuation of the downside, but it wanted to stir up the average speculation investor before it makes that move, because they want to be able to lose your money, get you out of your capital. So you have to be you have to be able to define your thoughts before you're getting into these positions, because that is the most it's 90% psychological, right? The human psychology is what drives market psychology, market momentum, right? Over justified optimism, under justified pessimism. It's just a fluctuation of those two. And the fractal formations, which is the fractal integration process between the time frames, right? The different sessions, they use those human psychological methods to be able to go back and forth, knowing where people are trading the most of the time. That's why the stock market has been around for as long as it's been, because they have defined market psychology through human psychology, and then that's how they know that price is going to be moving and driving into one direction. So when we're talking about another way that we're talking about market price is that when price is going to be moving into another direction, we want to catch the high. So I know that because it's going to be a new month, right? We're going to look for a new month. I know market price is definitely going to be shooting price super quickly to one direction. So new month means new month gives market makers new it's essentially volume, right? Volume, or you can say volume, or you can say a different ADR or a 80 average daily month, whatever. So it doesn't really matter. So what I mean by that is that the market makers have essentially in a month, they have a percentage that they can go into, right? They can go maybe 500 pips, 200 pips, but they have a flat percentage, right? So they can't go out. That's why you have these. That's why the market consolidates 50% of the time and trends 50% of the time, because each month has a specific percentage rate, right? Most of the time, because the market is unique in its own way. Most of the time, it has a low and a high, and then it has a volume that the market plays on, right? So the market can only run for a certain amount of time. That gives us time to understand that if there is a cap to the amount that they can trend or trade or run, that means that you're able to know how the market is going to move based off these ADRs, right? That's why I'll keep on preaching ADR, because it's so important to know this, because this is how the daily This is how midweek reversals are played off, right? This is how zone hops and market stop hunts are played off. It's based off just percentage over time. So I know that I'm kind of talking really fast, you guys, but I'm trying to get in as much information because I'm not going to be on live stream tomorrow. So I want to show you guys exactly how this positions work. And I will give this copy, right, of this format to anybody. If you guys just want it on the Discord, I'll be able to email you guys this as well in a PDF. So just feel free to message me as well, and I'll give that to anybody that's on these live streams. So moving forward, I'm going to be able to break this down, you guys, and show you exactly what price, or not exactly, but my hypothesis of where price is going to be going in the near future. So we can see that market price is going to be going down for the US dollar as of March, in my opinion. For the Great Britain pound and the euro dollar, we can see that price is definitely in a consolidation phase, which is good because it's consolidating at the high peak where definitely structure has been formed, where we had a break and retest at that low. So we can see that this was the last leg of structure right here. And then the market in the euro dollar has already broke this structure. So now it's consolidating at that area. So we can see that break and retest is a very valid element right now in market price. So when we ever see a break and retest, we can know that the market broke into an area, trapped those buyers right here, and then it moved price back, and then it hit their stop losses. So what we're going to look for into March is to retest that spike to that high. So that's why I'm looking to define the best time to get into the market. I'm not going to get in this week for the euro dollar just because it's not, the ADRs are, the 80 average daily, week and month formulations already been made. So there's no need for me to get into this trade. I'm going to wait until next month, which obviously starts tomorrow. And then from there, I'm going to look into it. So I usually don't trade on Fridays because I just have had a bad time trading on Fridays unless I'm trading non-farm payroll. So I look to get into positions. Obviously, I'm going to be looking to Tuesday, Wednesday next week. I'm going to definitely have some trades for you guys that's going to make a bunch of money for us. So for the US dollar, so the Great Britain pound as well. So same thing with Great Britain pound. We can see that that's a market zone hop. We can see that market price is definitely moving to the upside as of right now. It's going to keep on driving up. I'm definitely going to be taking a position on gold soon. As you can see that turnaround in gold, it did that retracement back to 13.18 as of right now, and 13 flat possibly, which then it's just testing, retesting structure. After we see that retested structure, because we can see price already here, right? Look at how much space we have. Like, guys, this is the best time to be in the market. Look how much profit we're going to be able to make on this area because the market's going this way, right? It's just a matter of time because it has all these trailing stop losses from this beginning area, right? It's going to hit this area. There's so much profit to be made here. So we're definitely going to be having some really good trades next month, and definitely going to be killing it with the market price. So I'm really excited to be able to give you guys some information here. Really excited to be on this live stream with you guys. But if you guys have any further questions, please feel free to put into the Discord. I will be there and be able to answer your questions of that time. I'm going to actually have this live stream a little shorter than I want it to be just because I do have a meeting to go to. But really excited to see you guys next week. Really excited to do a lot of signals for you guys. So watch those Forex signals, you guys. Watch them like a hawk because I'm going to be giving you guys a lot of signals for a lot of trades next week. And then I also want to be able, I just opened up that account for you guys, so I'm going to be trading with you guys with a smaller account that I'm going to be doing personally with you guys, and show you guys that you can maximize a small account to make obviously a hefty amount, just to give you guys to know that it is possible. So I'm really excited for this. I'm really excited for you guys to be on this journey with me. And this is Brenton with Traders Profit Club. Have a great day.